All right. Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, January 27th, and we are on the back end of an interesting interest rate decision. Great to see you guys all in the room. Steve, Ted, we got some big moves and finally seeing some definition or some direction here in some of the dollar crosses. So lots to go over. We'll hit DXY, Aussie. I'll touch briefly on Aussie yen, gold, SPX, euro dollar, Kiwi dollar, dollar yen, and dollar CAD. We'll take a look at oil and Bitcoin as well at the end there. Any other questions or trade setups? As always, feel free to throw them on the message board at any point. So we pretty much got what we expected, right? FOMC came out. Yep, it's time to tighten. We're going to be raising rates in March. That was the expectation. I really didn't see anything too telling, okay? Anything that Powell said that should roil markets. Are we in a tightening cycle? Yes. Is inflation running hot? It's not a transitory phenomena. Yes. But I largely think the markets already knew that, right? So we were just waiting for the catalyst. And as we talked about the DXY and where that thing's been standing, the basic focus was on resistance. And the weekly chart had us holding this resistance levels for months. Guys, we first started testing that resistance in November of last year. It's the 2020 yearly objective yearly open. There was a fib in here too, but we've since removed it just to add last year's high weekly close, okay? And that was right into like 96.67, right? So it gave us a nice range of resistance that we were looking for. We actually did tap it into the beginning of the year and pull back. Here it is. Here's the breakout. Now, watch the weekly close. We've had a couple of intra-week spikes above these levels. This does look legit. At the end of the day, we do need a weekly close above this region to continue favoring the long side in the dollar. All right, it is a breakout of lateral resistance. We're checking the median line right now, and that's why I'm a little hesitant. Just as a disclaimer, I was in Aussie yen, I was in euro dollar. Both of those got limited out last night. I'll show you where we got out, but euro, I kind of wish I had left a little on. At the end of the day, we'll be watching this into the close of the week. Where do we look now? Well, the daily chart looks like this. And here's what the daily chart looked like yesterday. All right, we were just checking that 2020 yearly open. There's the breakout. 96.98 was the August 2020 high. And again, there's that slope. So look, if you're not already in this, it is chasing from here. There's nothing to do. If you are in this, you're holding euro shorts, you're holding dollar CAD longs, watch it today, okay? Watch it today because this is likely to fizzle out. And I don't want you to get caught trying to look for 97 on the index on this specific stretch. So the intraday chart looks like this. Always good to see a breach of uptrend resistance, giving you the sharpest part of the rally as usual. And here's the breach of the ascending channel off of the monthly lows. That topside breach, again, fueled another rally. Now look, like I said, the only thing I have here, let me zoom this out to a 240. The only thing I have here is slope. So this pitchfork, if it is in play, 25% break, rally, median line was kind of messy into the start of the week. Here's the 75% parallel break, rally. Here's the upper parallel, right near 97.25. So could see a choke point there. Obviously, if this gives out, there's nothing until 97.70s. Okay, you have a 2018 swing high, you got a couple of 618 retracements up there, but that's really the big level beyond here. So immediately into the advance, into the US Open, watch 97.25s, 97.30. If that gives way, stand aside. Next level up is 97.70. Look for initial support back here at 96, essentially 97, right? Bullish invalidation now gets raised to the 2020 yearly open, to that zone right there we were targeting yesterday. All right, nice breakout in the dollar. We're not out of the woods just yet. As far as economic calendar is concerned, we do have core PCE data on tap. That's core personal consumption expenditure. It's the Fed's preferred inflationary gauge. So CPI is kind of the headline that everyone runs with on the street. But from the Fed policy standpoint, when they're looking to assess inflation, and they're looking to assess sort of their dual mandate, right, price stability, core PCE is the Fed's preferred inflationary gauge. That's expected to come in at 4.8%, guys. The previous read was 4.7. I can't even tell you 4.8 is going to be the highest read that we've gotten in at least 4 or 5 years, right? I haven't looked at the data, but just off the top of my head. So it's pretty important. It's gonna be a pretty important read tomorrow, okay? Side by side plus weekly. Hey, you got it. Which report? Ty, the personal consumption expenditure, the core, that's core inflation, and that's on tap tomorrow at 8:30 Eastern in New York. All right, here's the side by side, Ty. And here's the weekly. No change to any of those levels that we highlighted in last night's update. Right on tap. We've simply broken through this. We're at the 2018 high. We're somewhere in this range now. So we're looking to see if that upper parallel catches right here, or if we get this near-term catch right here. This is the formation we've been following just off of the December, January lows. Now, I guess I'll go, let me just, I guess I'll cover euro dollar right now, I guess. So here's euro. Again, I limited out of here at 113. It was actually 1190 last night on this breakdown. I even tweeted for you guys right on SB Squawk yesterday as this was happening. It was a beautiful fade, You typically don't get fadeable opportunities like this too often on Fed releases, because it's always devil's in the details. It's not necessarily hold or raise. It's going to be the commentary that comes out. But boy, oh boy, what a setup. So let me show you real quick. Here's what euro looked like heading into the release, right? This was published back on the 24th. We had broken below this level, okay? And we were trading just here. Fed comes out, all right? Let me bring it to you right here. So here's a 2-hour, and here's what it looked like. We were trading right below here, right? Here's where we were when the Fed comes out. Federal Reserve comes out, the dollar tanks initially. Euro rips, but where does it fail? Right at 113. I mean, even if you look at this at a 30-minute chart, right? Rip, fail. Okay, if the entry to me was like literally 112.80 with a stop against 30, and it was a one-way trade, Took off a quarter here at 1240, and then left a limit on at 1290 an overnight trade, and that kind of, or 1190 an overnight trade, that kind of got triggered out. So regrettably, I'm out of this. Wish I was still in. If you are still holding it, 1109 is your next level on the downside. Let me show you where that comes from. Here's the daily chart. 1109 is going to be this decent pivot that we made into the April decline. We tested it again in May. We tested it again in July. Huge clear-cut inflections, okay, back in 2019 in September highs. Really nice pivot. It's right at the 111 handle, 111.09. So that's sort of the next downside objective target here on euro. Take a step back. Here's euro on the weekly charts. All right. Big level, 1222. That was the level that we were talking about all of last year. It's the 161 off the high. Broken. Now, haven't gotten a weekly close yet. So again, on this trade, it's just like DXY, guys. Don't get faked out. This basic trendline resistance all the way back to the highs here. It's a close high from 2008, 2011, tested in 2014, tested in 2018, broken in 2020, tested as support in 2020. It's now support. Or let me say that again, it's now a major inflection range. So my point to you is into the close of the week, watch this. If you get a spindle like this, or if we pull back and close back above that slope, it'd be a decent recovery, maybe a decent rally, a reprieve back into 112.20s. But the point is that's a major level for me on a weekly close basis, okay? Again, don't take my word for it. Here's every inflection of that slope, okay? So if we break this on a close basis, on a weekly close basis, it accelerates. It suggests another accelerated move through 11 is your first level. Next major support comes right down here. Okay, it's a 786 of the advance. It's a 2019 low week close. And that gives you 109.76 into 110 proper. All right, so what a move. What a move. I hope some of you got involved in that. It was an awesome move. Again, don't chase here if you're not already in it. Looking to see how we settle, specifically the week, but even today matters where we close with relation to that 111 level. All right. Questions on euro? One other sort of just commentary. The slopes that we were watching has us a break here, which again risks the accelerated drop to the next sort of parallel level. Not going to help. All right. Ty, SPX is on there. NASDAQ is on there. NDX, I'll add it. Gold is on there. Silver. Okay. And 10-year in crude. Yep. I got you. We'll hit all of those. We'll hit all of those. Okay, so that's euro. I just want to take a kind of segue there to show you where most of the action has been, at least on my part. We'll go over Aussie and Aussie yen now. So let me hit Aussie real quick. Another trade where regretfully I didn't take it because I was involved in the Aussie yen. I didn't want to double up. I think actually this one might have been a decent pull. I mean, we grabbed, I think I booked, what was it? I didn't grab too much. I think it was 25 pips on Aussie. Euro was 78 pip move. So we'll let me backtrack. So here's Aussie, and here's what it looked like last night. So the break, or it hadn't broken. What we were looking for, and what I noted here in last night's update, is that the weekly opening range was preserved. Here's your weekly open. You dropped into a Monday low. We've been sitting in that range ever since. The fade opportunity was just as apparent here as it was in euro. Okay, here it is, 30-minute. Okay, I'll even go into the 10-minute here, get really granular. Here was the release. Okay, here was the release, 2 o'clock. Dollar initially sold off. Aussie initially rallied. As soon as this 10-minute candle closed, stop against the high, looking for 71.15, looking for 70.60. So again, a beautiful opportunity for a fade yesterday. It took a while, and sometimes you have to be patient with this. But when you see a major level, this was the weekly open, this was the 38.2 retracement of the decline. When you see a level of significance like this give you that kind of reaction during a release, man, that's your screamer fade. And I hope some of you caught that when I tweeted it yesterday. So look, from here, we're at support. 786 retracement of the advance gives you 70.60. You got the down slope here. I do think it inevitably breaks. Near-term resistance, now 71.15. Bearish invalidation, still steady. Okay, you would need to close above that key region we just talked about to validate a reversal. A break below here, and you're looking for critical support. Critical support. Remember, that 2020 open and the November low is a massively important level, a huge inflection in price, okay? And that's right into the 70 handle if we break 70.60. But initially, right now, this is your initial support. Watch this into the open of trade today. Watch this into the open of trade today. Again, here's the intraday. By the way, I'm going backwards here, but Aussie on the weekly charts. okay? We've been talking about this range since the yearly open. The pullback that we made, let me move this. The pullback that we made into the early open missed that 618 by just pips. So we've been focusing on this yearly open range, hasn't really given out yet. If this is the break, 70 is your major support zone. And again, that 70 handle, forget what I say, always look back in price, guys. Look at how many pivots, low, low, breakout, resistance, resistance, keep going, resistance, resistance, break, acceleration, support, support, and it's the 2018 lows. Okay, this is massively important. So Aussie dollar looks like it's on the way for a downside play. Still looking bearish, sub 71.76, near-term resistance 71.15. Critical support below 70.60 is going to be right at that 70 handle. No data from Australia for the rest of the week. You're pretty much going to be looking for the dollar to drive things, and you do have, like I said, core PCE data on tap tomorrow into the close of the week. Any questions on Aussie? Beautiful trade. Again, I didn't want to double up on all the dollar long exposure, but if you missed euro, man, this was a beautiful play as well. Beautiful. All right, so that's number 3. Let me take a segue real quick and go into Aussie yen. Jamie issued a trade there. If I'm not mistaken, I think he had an open limit on it. I actually limited it out overnight, but I'll show you how I did it. Here's Aussie yen. So if you recall, here's the daily charts that we were looking at. I'm not sure if I even have an Aussie yen weekly, but I usually have something that we're looking at. So we broke below the 52-week moving average, nothing major there. But the short idea came in from 2-step. A, equities, which we looked at, we will look at in a moment, were primed for a pullback, right? We already did major technical damage in the SPX. We talked about that last week. The focus was lower. And again, what is your prime quintessential FX trade to represent broader risk assets? Aussie yen tends to be a pretty strong, reactor. Highest yielding, lowest yielding, nice disparity. So the intraday charts looked like this. Okay, here's the 60-minute. I just want to show you how this panned out. This was the pitchfork I was looking at heading into the release. Here's your weekly high, right? Your weekly opening range high. Try to break it. Here's FOMC, another beautiful fade opportunity. Okay, here's the 30-minute. Massive rip, failure, pullback. Once that candle closes, stop against the high. Initial targets were 81.85 and 81 proper. Okay, so I took I think on this one, I took like 2/3 here, and then I left the limit overnight, which kind of limited out. So I'm not in this anymore. I know Jamie's still looking for something on this, but at the end of the day, do you send a heads up when you see these? Yeah, so Ty, I can't give you trade by trade scalping alerts, right? It just doesn't work, Ty. Something when we first developed SB back in 2014, we were talking about. It's just too dynamic. I'm thinking too quick. I'm adjusting. I'm adding. I'm taking some off. I'm reducing. But the levels were clear as far as the fade. So Jamie actually did trigger the trade here. So if you guys look at the SB Squawk, he actually did trigger the trade in this one yesterday. So it was triggered back on 81.85, stop at 82, and he has the limit open. So it was actually a swing trade too, Ty, that was initiated. But this is where I was looking at it, right? So I still think this thing possibly has another move to the downside. Obviously, this slope is kind of null and void. I was just seeing, since the break, I wanted to see if the lower parallel offered any resistance here, but kind of like drawing straws here. So I'm not going to get too wrapped up with that. Listen, at the end of the day, I take this as still an objective opening range. So I don't want to get too married to it. If you're holding this trade, I would go break even or better at this point. But if risk tracks lower, you're still looking for that 80, 50 level. All right. So Aussie yen may still be a decent play. Looking for some clarity here as we continue just to kind of range within the weekly opening range. Any questions on this? Okay, so those were my two biggest players yesterday. I kind of dabbled in some other crosses, but just in and out real quick. Aussie yen and euro covered. All right, let's take a quick segue and cover the other ones that we updated from last night, namely gold. There's a couple of you guys who love this trade. I know I don't see all of you in here today, but massive breakdown. Massive breakdown. If gold was going to hold higher, and I did put out a piece on daily effects with regards to this setup, really calling this drop. But if we wanted to see gold hold, I wanted 1807 to hold today. And it looks like it's not. So we might need to rethink sort of the medium-term outlook. Look, here's gold, guys, on the weekly charts, okay? This is the simple 2020, 2021 trendline resistance. 1, 2, 3, 4, fourth test and fail. If the markets were to close the week, guys, at these levels, it would be marking an outside weekly reversal off the high, not a bullish development. Now, you guys know from my part, I'm bullish gold on the longer term. I've said that since the beginning of the year. I've said that for quite some time. I do think gold will be, longer term prospect is bullish, but medium term, this does upset things for sure. Doesn't necessarily change things. We're still in the I guess now at this point, multi-year consolidation pattern. Momentum is still flatlining at 50, but the breakout scenario that looked so apparent early in the week has kind of reversed course here. So definitely a threat, right? A threat. And again, just for giggles, right? Here was my last update on daily effects. This was the report I published yesterday to show you guys, right? Big resistance. Here was the pullback. Need to see support right at 1813 on the intraday charts. The 618 came in at 1809. Man, doesn't look like we're gonna get it. Here's what the intraday charts look like yesterday on my update in gold. Went over Aussie, here it is, right? Here's what it looked yesterday. So weekly chart, resistance. Daily chart, resistance. We came off the 2021 high week close. So we need support here. We need support here. Doesn't look too good. Doesn't look too good, right? So look, at this point, we have to respect price action, and we have to, give merit to where the breaks happen. Didn't want to see that 1809 break. Sorry, I had to snap the levels there. Didn't want to see it break. Here it goes. This could be a larger correction in gold. Red alert. Red alert. Hey, Iman, perfect timing. Says, sorry, I'm late. Welcome aboard. Iman, I hope you didn't get caught up in this. We were just going over gold. Major breakdown here. Okay, major breakdown here. I was just going over with the guys. I'm not sure where you came in, Iman. Let me know if you caught it. But for me, it was really 1808, 1809. Kind of that's where we needed to see support. And what happened? The break. And what happened after the break? Acceleration. So this is what I always tell you guys. It's not just that the level broke or not. It's what does price action do there? And on a break of a major support confluence, specifically the 618 of the yearly range, major uptrend support, right? You want to see an accelerated drop, and that's what we're seeing now. So the risk from here is for a tumble way down towards 1791. I'm sorry, that retracement never got updated. There it is, 1791. Okay, and that is the larger slope. Let me take you back to the daily chart, right? This is the pitchfork we've been following. 1, 2, 3 from last year, right? Really nice pivots along the 75% parallel. That was resistance. Here's what we needed to see support hold. Watch today's close. If we close below this level, 1791, just a little bit lower, okay, guys, is going to be that like confluence region there. That's trendline resistance off the highs, the record highs, right? And then again, that pitchfork off the low. So 1791, 1785 maximum, this $6 range needs to hold. If it doesn't, could be really, really dark for gold. You're looking for 1750s and beyond. So heads up, heads up. Here's the side-by-side for you, Ty. Big break, guys, big break. Questions on gold? Could be, likely to be, a major market mover tomorrow on inflation data. Remember, what is gold's primary functions as a market asset, just historically speaking? It's a safe haven during times of market turmoil, and more importantly, it's that inflationary hedge. So if we do see core PCE come in, I don't know, higher than 4.8, could offer a help, a leg, a support, a floor in gold. Okay, so keep an eye on this one as we head to tomorrow's data release. For silver, Ty, I know that you're looking at silver. It's going to be a similar scenario. Try saying that 10 times fast. The basic level of support I wanted to see hold there was 23.28 into 23.45. That just broke. Now, I don't have too much conviction on this slope because we haven't been in play as often. So, it does have a support slope there, but I wouldn't get too cute with it. Ty, looking at this from the slope that we were doing on the near term, that's a break. That's a break. All right, let me zoom this out to the 240 so you can get a photo here of what we're looking at. The only thing I would suggest is that former slope resistance, broken, turned support is where we are now. 618 of the rally is just lower. So very similar scenario, right? Very similar scenario in gold. Lower, but you start to run some really, really important targets that you'd want to see offer some sort of pivot. If this breaks right on to 2166, that's the September low. If this holds, there's still hope that the breakout that we saw back here may still materialize. But this is the levels of support we would need to hold both on gold and silver. Make sense? Again, here's silver on the weekly charts. Kind of a mean reversion trade. All right. That's gold and silver, 5 and 6. SPX, hello SPX. It's not too often you get equity indices with such stellar performance within the technicals. But when they do, oh my gosh, do they play well. I've been tweeting this exact chart, guys. No change on the levels for literally like 8 days now, 7 days. Since the break, it's been magnificently beautiful. Break the median line, saw another accelerated drop. Here's the lower parallel. Obviously probed well deep into that, but you got the recovery. Here's the rally turning right at a basic 38.2 yesterday, pulling back into a 618. It was textbook. Here's SPX, first on the weekly charts. Guys, it's important to note and be mindful of this chart tomorrow into the close. Here is your 52-week moving average, your yearly moving average. The last time we closed a week below the 52-week moving average was back here. That specific move, okay, charged a drop of what? Another 25%? We talked about the fact that On daily momentum, which I'll show you in a moment, that's also a very big signal. But my point is here. The intra-week drop turned just pips from a basic 38.2 retracement of the entire 2020 advance. It's set to close above the 52. If that happens, it's going to be something like this. It's going to be something like this. Okay, it would suggest near-term recovery. So watch the weekly close. Daily charts look like this. All right. Now, this slope is pretty messy. I don't want you really to focus on this too much because we did actually close below it. But a basic 38.2 gives you 44.50. That's exactly where yesterday's rally faltered. Still have a risk for a larger recovery coming off of downtrend support. Now, this is not the most telling chart. The most telling chart, in my opinion, has been this. And this is the same, again, same levels, guys, we've been following for a week now. So here was yesterday's rally, right into 38.2 retracement, downtrend resistance, beautiful turn lower. There's the 618, another rebound. The focus right now for SPX is on a breakout of this zone, 42.73 to 44.50. How do I say this in a way that makes sense? From a technical standpoint, I want to see one more low. Now, that just might be me. It's not a trade recommendation from SB. It's just my personal opinion. But from a wave structure count, if this is wave 3, you have a truncated maybe wave 4, maybe a consolidation pattern. You need that last low to register. So I don't know if we get that. At the end of the day, this is my near-term bearish inval. This is bullish resumption. Okay, anything above 45.90, you're looking for the resumptive move to new highs. But I'm looking for one more strike possibly. Okay, possibly 42, 45. You know, I would have loved to see 42. I would have loved to see a basic 236 touch. But at the end of the day, I'm going to respect a break of this range. If it breaks higher, you're looking for the upper parallels, period. But all things held constant, if we take sort of a back step wave structure, I want to see one more low before this thing resumes. Okay, so that's my sort of take on SPX. Like I said, intraday, that's the only range that matters to me. So even if we rally towards 44.50, guys, look for a pivot there. Look for a pivot there. Questions on SPX? You know, maybe near-term consolidation here. So I'm expecting some back and forth. Volatility is likely to be there. I think we'll get a bigger swing on this one tomorrow on the CPI read. Now, NDX is a very similar play. Here's what NASDAQ looks like on that tumble. Same structure, Ty, I was showing you yesterday. Same levels, brother. 14,073. The 618 was basically 14,000, 13,948. It's exactly where this thing grounded out. A basic 38.2 is a little bit higher and not quite as clean on slope as it is with the SPX here. So a little bit different of an animal, but certainly, like I said, same thing here. The wave count isn't quite as clean, but I would have loved to see another low before we start to make any meaningful recoveries for sort of a threat for a resumption of the trade. So those are my levels here on NDX, Ty. All right. And just as a side note, guys, it is a good time to kind of go fishing. I was just looking at my equity board. So these are some equity trades that I've just been tracking and trying to find some decent entries. Here's Amazon, you know what I mean? Beautiful drop. There's actually an uncovered gap down there at 26.15 if we get it. Apple with a decent decline. Still think that we have a little bit more to go there, but you have a lot of different setups that are sort of begging some really interesting moves. Here's Disney coming off of a beautiful support zone. I'm looking to see how that reacts. Facebook with a similar type of play. You know, Microsoft with a similar type of play. They've all shown a lot of or a massive sell-off, and I'm just looking to see if there's any opportunities to get some discount offers here. So let me know if you guys have any questions on that. But NASDAQ side by side. Yeah, I got you, Ty. Here it is. All right. Okay, so that's our walk around the equity board. That's 6, 7, and 8. Next up, we covered Euro. Kiwi, number 9. You know what? Kiwi actually saw a pretty decent drop. I didn't get involved in this one again because I was involved in Aussie yen. I didn't want to kind of double up, but look, Kiwi's breaking big support, and that's kind of sort of the game plan. Remember this chart? I've been showing you this chart since the start of the year. This is the weekly chart, excuse me. You have a 38-2 retracement of the advance off 2020. You have the 2020 objective yearly open, major pivot in price. Look back all the way to 2019, right? Nice pivot. 2018, nice pivot. Pretty darn close to the 2017 swing low there. So huge region. We closed in that region yesterday. Here's this week. Again, watch the weekly close. We need to close below this slope. We need to close below this slope. That's basically like 66.60s. Downside level of importance that we've been looking at, 100% extension from a decline off last year's high, that's 65.60. I still think you get a drive down there. Now, intraday, or I guess in the near term, I should say, here's the daily chart. An objective break of the weekly, of the monthly opening range right back here on the 21st solidified the move, right? Here's your monthly open, you set a low, you test the high, here's a break. You're looking for a late month low. It's the 27th, right? We still have 1 calendar day left on Monday to close out January. But all intents and purposes, you've broken the monthly opening range. You're looking for a late month low. Now here we are again. I wouldn't chase this. If you're already in a trade, I would have my stops at break even or better. If you're short from anything sub 67, I would be, much more protective on my stop. And from the downside perspective, I really don't have anything of merit, like I said, till 65.60s. That's another 70 pips, 60 pips from where we are now. If you look at this on the intraday chart, even the pitchfork formation that we were following looks like it just broke. Remember, a break of downtrend support, oftentimes the sharpest part of the decline. If this is real, rallies should be capped today by 66.40s. You're looking for 65.60. Now, a couple of different interpretations of the slope. What can I say? This is what I was looking at ahead of the webinar here, right? If we just take something like this, it's very liberal, but for time value, right? It would suggest 66.60s basically into Monday. So that's my only problem with Kiwi. I wish I had a better slope. This pitchfork was really clean on the break. You can use the actual stretch high here. Looks a little bit cleaner in some areas, but that still doesn't give you much help, right? Still doesn't give you much help. So I'm just gonna stick with this, looking for resistance here today if this is legit. If we close back above that, I'm gonna go neutral, because again, we've had a multi-day decline. What am I saying? It's been like a 5-day decline. If we close back above that slope, you could get a pretty mean recovery. So not involved in Kiwi. I think the levels are clean. I just want to see momentum continue. I don't want to see strength past 66.40, 66.50 if we are heading lower today. All right, that's New Zealand dollar. Any questions on Kiwi? It's number 9. All right, here's the abomination. And then I can't believe dollar CAD was this late in the session because it's one of my favorite setups as well. But let me go in order here first. Here is dollar yen. So our last update on dollar yen was really just kind of highlighting the support zone, a beautiful support structure I thought was going to give us a lot more play just because of the significance of the level. Didn't know it was going to be the low. Okay, so let's take this from the top down. Here's the weekly charts. This covers essentially, guys, almost the entire yearly range. Okay, here's the yearly high, so maybe not the whole thing, but 60%. It has now taken us through the objective yearly open, so that's been broken. And that huge pivot zone that we were looking at for years, yeah, we've now sailed through it on both sides. So it becomes a lot trickier. For me, hey, this is your yearly range, guys. That's all that matters. That's all that matters. 113.50 on the downside, 116 on the upside. I know it's 250 pips. I recognize it, but hey, it's dollar yen. So from the weekly charts, it looks bullish, but you know, what am I going to do? Buy here? Where's your stop? So for intraday traders, for guys who are near term, this is a lot of people are going to get people get chopped up. Don't chase. Don't chase, okay? Here's dollar yen on the daily charts. Here's your yearly open. Here's the 618 of the monthly and yearly range. Is that a breakout? Well, if we close above it today, it surely is, right? So even on the daily charts, don't really have much, you know? You could look at something like this, which I was trying to see if it offers any guidance, right? Any description for price action. Nothing on the median line. Could be a breakout, but doesn't hold much merit. So this is why the abomination is earning its name very well now. The only thing that was clear on dollar yen was the near-term charts. And guys, here it is. Here's the same exact chart we showed right ahead of the Fed. What was our breakout level? 114.57. So looking for a break of the weekly opening range that we were ranging in, that actually held for quite some time. Here's the breakout yesterday. Here's the rally into resistance yesterday that held for a while until the close of trade. Boom, launched into Asia night. So we're back up here now. We're back above this region. So huge support structure. Remember, this is one of those trades that looks cleaner on the intraday than it does on the daily. Here's the pitchfork we've been working with. High, low, high. Pitchfork support, 25% parallel broke. If this closes above the median line, you're essentially looking for a rally up towards here. A break of uptrend resistance. We were even looking at this really near-term upslope, right? Saying, hey, this could be a bear flag, right? Pennant, whatever you want to call it. It would suggest that if you break the downside, you're looking for the real tumble. But remember, we were looking for dollar strength. So I was looking for an inflection here. There was no opportunity. There was an opportunity. I missed the opportunity to play the breakout. It was right here on the pullback in Asia with that rally here for a stop against that swing low. But from here, like I said, if you're trading it, you're holding, just be shaving off. I'd bring my stop up to at least 1450 or better. Next upside target's 1573. And like I said, big resistance, 1613, 116 proper. All right. Questions on dollar yen. Again, tends to be a very sensitive pair to US inflationary data. So could be a decent volatile trade here as well tomorrow into that CPI, PCE release. All right, and the other one, probably the best trade yesterday, or one of the best trades yesterday. I loved it. Dollar CAD didn't have enough involvement here. This is one of the ones I was in and out, but man, what a setup. So again, dollar CAD, we've been talking about favoring the dollar CAD long position for some time. Here was our update back on the 23rd. We were talking about the major support zone down at 24.30 into 24.70. Guys, it's the same support zone we've been talking about since last week. Here's what it looked like on the 17th of last week. Here's the daily chart. Or excuse me, that was the weekly. Here is the daily chart, grounding into this critical zone of support. Here's the weekly chart in dollar CAD now, right? Huge support, uptrend. If you notice that 52-week moving average, yeah, we never closed below it. Okay, really, really nice technicals. Here was the daily chart. There was the daily chart last time. Huge support zone. Huge support zone. Now, basic 38.2, the basic yearly open, well, that's 26.40, 26.46, and that was our major level of resistance. That was the sort of topside target on the play. Here was the intraday chart way back then on the 17th as we first entered into that key support zone. Fast forward, that key support zone held again and again and again. Here's the open of the week. We said, look, that's still key support. That's your major resistance level. Here's the intraday chart now. Here's the intraday chart now, okay? So that level held, breach, right? Here's the push. The advance has this pitchfork on it now. 1, 2, 3. The lower parallel held support at the weekly opening range lows yesterday. This was a beautiful trade. Now, why this wasn't sort of a holder for me, why I didn't sit in this one like I did in Euro, like in Aussie Yen, was because you got a lot more back and forth, right? There was just a lot more chop here. So I kind of got shaked out. They were all like little snippets. They were winners, but much more smaller positioning and much more smaller gains. Here was the breakout. Not the cleanest in that you want to see a break of downtrend resistance accelerate. I don't want to see this immediate snapback and then we're kind of meandering around that. It makes me second guess the break of this downtrend. This ascending formation actually still looks pretty clean. I mean, here's what it looks like on the 60-minute, right? You're getting a lot of play on the interior levels. My only problem here is that, what do you do from here? What do you do from here if you're looking for new positioning? It's not like Euro, which saw a break of the weekly opening range and a shot, right? It's stalled. It's stalled big time. Even the weekly range highs, you know, we're not even above that right now. So dollar CAD is a tricky one. The one other tidbit I'll note, you know, I got just a side note, guys, an anecdote. I got a call from a good friend of mine. I haven't seen him in years, who worked with me on a trade desk at forex.com back in like 2005, 2006. And he was asking, you know, what my take on the markets were and, you know, what positions he was looking to get into. And when we talked about dollar CAD, he brought up the same quintessential line that everyone brings up, guys. Well, if oil rallies, or if oil continues to maintain its rally, isn't that hard for dollar CAD to kind of rally, right? Because if oil, again, tends to correlate pretty decent with loonie. So if oil strength should lead to loonie strength, and that should curb dollar CAD strength. And I think there's an argument to be made there. But I don't think that you could just lean on crude prices as the only reason that's going to keep the dollar down versus CAD. And I think, I don't take my word for it. Again, I mean, this week alone, you can see that, you know, we've seen strength here. Yeah, oil prices are rallying too, but I don't want to say that just because oil is rallying, dollar CAD cannot, right? So I think oil prices higher will curb the dollar CAD rally, meaning, you know, the extent, the stretch, the strength of the rally may be a little bit softer than we expected because you're getting that downdraft from CAD strength in the underlying oil trade. So that's my problem here. That's why I you know, prefer to really press heavy the euro short rather than the dollar CAD long. I do like this though. And again, on an objective standpoint, guys, that's a breakout, right? Like we closed above that level yesterday. So I'm treading carefully here. I do think you could get a decent pullback because we failed right at the high day close of the year. That's what 2724 is. I do think you can get a little bit of a pullback here, but if this is legit, I want to see strength and settling above the yearly open. Okay, so I want to see support ahead of 2630s, 2640s. All right. Any questions on Looney? I loved the rally. The fact that we're fizzling out here makes me think you get a little bit of a pullback first. Questions on dollar CAD? It's number 11. Okay. Speaking of dollar CAD, here's oil. I don't have a near-term setup for you guys on this one. Here was the bear flag we were looking at into the start of the week. That broke. Okay, that broke. Once that broke, you're right back on the resumptive path. So the uptrend is intact, but does look a bit tired. Okay, so I wouldn't be surprised, guys, if oil rather does make another high and then fails before a decent sort of corrective pullback. The 618 of the drop gives you 90.68. So it's a couple of bucks higher than where we are now still. Again, there's not much, slope to play with here. Here's the 240 minute. It's just a slow grind higher. It's a slow grind higher. So I don't have much for you on this one. Here's the daily chart. Okay, this retracement null and void. There's a new high in place. Again, that's 618, 90.68. We could probably drop down. Let's just keep it. It's 2013 swing low. Yep. Probably still got more room on the upside here. Questions on oil? A quick look at the 10-year you wanted to look at, Ty. Here's the 10-year, okay? It's the same range we've been in. I think you do get some more capitulation here. So I think you get some more back and forth. Support still here. I mean, we did close below it, but yields, you're not gonna find what do I want to say? The movement in technical clarity isn't usually as crisp here, but looks pretty clean nonetheless. I mean, at the end of the day, you need that close above 191, 194 to get the resumptive move higher. You're constructive above 150 on yields, right? So this is price down, yields up. All right. And last but not least, Bitcoin. Who's trading this? So I don't think the mess is over yet. I mean, this might be a good area to start fishing. If you're a longer term sort of, if you missed the craze and you're trying to inch your way into a Bitcoin average position, 3530 is the level that I was talking about, is possibly a decent zone, but I don't think the washout is quite done yet. I still think you could get a 32 clip before this is said and done. Look, here's the daily chart, okay? And another conversation I was having, I just like to give you guys a heads up to see how other traders are thinking around the desk. I had that same conversation I was having with that trader yesterday, and he was saying he was convinced Bitcoin's done. He's like, yeah, this thing is done. The asset has been completely washed out, and I think the viability of it as a store of wealth and all that is being washed out, and retail is going to all get dumped because they've all lost that money. Compelling argument. I think a popular argument that you can make. However, what I think he failed to see is that there is so much institutional interest already in this. You know what I mean? And it's going to be very difficult for an institutional trader who's managing a portfolio or managing a book to kind of open up reallocation to this asset class after a drop of what, 50%? You know what I mean? So I do think there's gonna be 50%, 51%. There's gonna be a lot of sideways, a lot of pain here, I still think, before you start to see any type of mountable rally to sort of draw in more hands. At the end of the day, from a technical standpoint, if we close sub 3540s here, 35,400, I think you look for 29 essentially, right? 32,000s, the 2021 low day close made in January of last year. 28,737 is the 618, the 2021 low. So the levels are clean. I just think that momentum isn't there. The risk is still for, a continued slide lower. So I'll continue to update you on this. Here's what the intraday chart looks like. It's actually pretty interesting in that that same pitchfork we've been following is still in play. Do you guys remember this? Here it is. A pitchfork that's just angled to that slope. Basic trend line resistance. Lower parallel caught the lows. Here's the median line. So even if this recovery gets 39.57, there's 41.50. That's still your breakout zone. And that would be a basic 236 of the drop. So even if you're just going to make a little soft recovery, you're still bearish below 41,450. So a wait and see game, okay? I may be a purveyor, a purchaser of some of these, a couple of purchases, some down here. If we get down to 28 for sure. Longer term though, guys, longer term. This could be a world of pain for a lot of, and it is. Millions were wiped out on this decline, guys. And overnight millionaires, kids that are 18, 19 years old that just shot it big with Bitcoin. They're sitting in a world of pain right now. So could be an opportunity soon. We'll continue to track it. Ether is at the same standpoint. Ether broke a bigger support right there. That was a very, very nice confluence support. Dropped right into that high day close that we made back, what was that, in July of last year. Again, here's what the pitchfork looks like here. You're at the median line. Could offer a near-term recovery. 2900, 2950 is big resistance. Bearish invalidation still up at 3272. But a break from here, it's very similar like Bitcoin. If it breaks from here, man, there could be another pretty precipitous drop down to 1732. So that is the crypto update. And guys, that's everything on my list, 11, 12, 13, and 14. Okay, we got a good run today. Any other questions or trade setups, feel free to throw them on the message board. Otherwise, guys, I'll leave you there. Use caution tomorrow, okay? This PCE read is likely to be pretty big in that, again, remember, the Fed's only problem in their dual mandate, they already said that we're already at essentially full employment, right? The labor side looks pretty high. It's actually very tight. There's more labor positions than there are workers. So dual mandate is price stability, A, and maximum employment. If maximum employment is essentially, at the natural rate, then it's all about price stability, i.e. inflation. That puts added emphasis on tomorrow's read. So keep an eye on that into the close of the week. Watch the weekly closes on a lot of these setups, guys, and we will touch base again on Monday for the free session, right back here on SB on Tuesday and Thursday. Best of luck trading, guys. Have a great weekend. Same to you, Iman, Steve, Ted, Ty, Ziad, Aurelian, all of you. Have a great day, guys, and have a great weekend. Cheers.